In this video, you will learn my exact top-down analysis strategy using the supply and demand trading methodology. This is the top-down analysis that I've been using to trade for 6 years, and many members in my Discord community are using this exact strategy to catch profitable trades in the markets. The best part about this trading system is the fact that you can take trades with the trend and against the trend. You don't have to pick one or the other if you understand how to use top-down analysis the right way. With that being said, let's get right into the video. So without a doubt, the first thing you need to do when you open up a price chart is go to your higher time frame. It does not matter what higher time frame you use, as long as you're using the appropriate entry time frame, which we'll be discussing later. I will show you the chart of what time frames to use. Now, the first thing you want to do is identify the trend on that higher time frame. In this instance, in my opinion, it is completely an objective uptrend. I don't think there's anybody who's going to say, oh yeah, this is definitely a downward trend, right? We're breaking the highs. We have clear peaks and valleys, right? A very, very clear trend line. This is an obvious trend line that nobody would deny. That is what we are looking for a trend. Now, we're not zooming out like this, because when you zoom out like this, okay, now to me, it looks like we're kind of just trending down overall, and this might just be a small up move, and I understand that. However, when we zoom out this far, this is basically a different time frame, a higher time frame trend to the downside, whether it's an H4 or a daily. That is what it is. We are looking for, some of the most recent price action. Again, we're not trying to zoom in and just look at a couple candles. It has to be, semi-reasonable. In my opinion, this is a trend to the upside. This is the most current trend. That is the first step to identifying what direction you want to be trading in. It doesn't mean that there's not money, to be made on the downside here, and we will be discussing that later, how to trade counter trend like this. But obviously, the most money was made to the upside, and that is the highest odds thing to be doing, is trading with your higher time frame trend. So the first thing to do, identify trend lines or trends. A lot of the times we won't even have a trend line because there's no clear peak and valley, but price has gone up so much that we pretty much identify that as a trend. So we want to try to look for trend lines, very clear trend lines, and very obvious trends. We want to open up a chart and say, everybody on earth is pretty much going to call that an uptrend or a downtrend or sideways market. That is the first thing we want to identify, this upward trend. Now, it's also possible that price can be in a sideways market. This is pretty much a great example of that right here. Look at this sideways price action, right? And obviously we did end up breaking it below, but we eventually continued that downward trend. But this was definitely a sequence of sideways price action. You will see this all over a chart, right? Okay, the overall momentum is down, but a lot of sideways action here when not a lot was going on. That's another important thing to identify as well. Trading in sideways price action, not going to be, your best decision based on my experience. But if you look here, look at the trends to the upside here. So much money was made to the upside. You easily could have gotten a long trade down here and let 25% of your trade run and then just continue to grow that trade. I'm not saying you could have got all of the trade, but I'm just saying when you're trading with the trend, it offers a larger risk to reward and you can be less aggressive with your trade management. So the first thing to do, guys, open up your higher time frame chart and identify the trend on that higher time frame. All right, so step number 2, we need to identify our higher time frame supply and demand zones. Now, this is a blank price chart, and I kind of wanted to walk you guys through exactly what I would do. Let's say this is a blank chart. I need to identify all of these things we're talking about. Well, again, the first step, we are identifying the trend, which we can see is clearly to the upside. Nobody on earth is going to say that this is a downward trend, right? Why? Because we have clear peaks and valleys right there. Not only that, this past week, we did remove the high right there, which gave us that upward trend, which is telling us that longs are going to be higher odds. But that is why we also want to identify our supply and demand zones on the higher time frame, because I'll show you here in a minute why getting in long was not high odds up here. And the reason is because there was an opposing supply zone right here. You can see I just drew it. And why is this a supply zone? Well, for one, it removed an opposing demand zone from back here. Let me just draw it out properly. So we had a demand zone that was formed back here, and actually another demand zone here as well. So it did remove 2 demand zones. And why is this a demand zone? Because it has an explosive move away, and it was a proven demand zone, meaning we got to pull back to that zone and react off of it beautifully to the upside, proving there was demand there. Now, that demand zone was removed by this supply. Why is this a supply? Because we have our basing and that strong aggressive move to the downside. Reminder, this is the supply and demand full course PDF that comes with the Diamond membership if you guys are interested. We always talk about how we are looking for those strong, aggressive moves out. Like you can see in this slide right now, we're looking for the basing and that strong, aggressive move out. We are not looking for tiny little moves like this, little basing candles. We are not looking for that. Yes, I would definitely agree that some sort of selling took place up here, or supply, whatever you want to call it, and price dropped. That's different than this drop. Look at the aggressive drop there versus this chugging along basing overall drop. I agree, both are a drop, but we are looking for those aggressive drops because that is where the real true supply is formed, or demand, whatever you're looking for. That is where that's formed because the move is so aggressive. That's how much demand and that's how much supply was in that area as we dropped down. So that is step number 2. We are identifying our higher time frame supply and demand zones. So typically, like I said, this is an upward trend, right? I always put an arrow out on my charts for all the members to identify the trend. This is a daily time frame. So I will show you guys the time frames you should be trading later on. Make sure you stay tuned for that. But look here, beautiful trend to the upside. Like I was saying, we want to be trading with the higher time frame trend. However, when we are pulling into an opposing supply zone in an upward trend, that's when your long trades here become lower odds. It doesn't mean you can't continue to look for longs. It just means that it's lower odds. So I'll be breaking down later in the video as well what to do in these situations. But for now, this part of the video is just telling you guys we first need to identify the trend to show what the trend is, to be showing what the higher odds thing to be trading is, whether we're getting in long or short. The second thing is we need to identify our higher time frame supply and demand zones as well, so we know when we are pulling back in to a higher, maybe we're pulling back into a higher time frame opposing supply zone. So then your long trades are going to have a harder time getting to take profit, right? Just like we've seen here. If you took a long trade here because you identify the higher time frame trend, but you did not identify the higher time frame supply zone, then you might have taken a loss here or a break-even trade when you should have maybe just been more aggressive with your profit taking. So now we are going to look at when we should be more aggressive with our trade management and look for a lower risk to reward, and when to expect a higher risk to reward and be less aggressive with trade management. Knowing the difference between these two is going to change your trading drastically. It changed mine. It allowed me to get more trading setups because I felt more comfortable trading counter trends. So let me break it down exactly right now. The first thing we'd be talking about is when our entry time frame zone lines up with a higher time frame trend, but it is not at an opposing zone. So on this USD JPY chart here, we are at this daily supply. Let's delete this daily supply and let's pretend like this supply was not there. It is there, and that is why we are seeing a reaction off of it. But for the sake of the video and for the lesson, let's pretend there is no supply there. This would be a great example of when you could look for a higher risk reward. Maybe not look for a higher risk reward, but at least expect to see, a larger move to the upside. Why? Because based off the rules, we have a higher time frame trend, and then so this is a daily chart. Our entry time frame would be a 1 hour chart. Let's say we had this 1 hour demand zone right here. It's a little bit big. Let's say we had this zone here with our risk to reward tool like this. Now, why is this a zone? Well, it clearly removed some sort of supply zone right there, broke a high as well, which is great. And more importantly, look at the nice tight basing and this strong, aggressive move away, just like we discuss in all of my videos. That is why that is a demand zone. You can see beautiful pullback entry with supply and demand. We simply place our order at the zone with a stop loss below, just a little bit, sometimes a little bit above the zone we like to enter as well. Stop loss below and take profit above. Now, when I talk about trade management being less aggressive, more aggressive, what does that mean? Well, again, this 1 hour zone here, this is a 1 minute chart, but just let's say for the sake of the video, this is a 1 hour demand zone here. Let's just say this 1 hour zone was going back to the daily chart. Let's say this 1 hour zone was sitting right as we broke this high right there or whatever. It's with the trend, right? So we find the 1 hour zone, we look at our higher time frame, we say, okay, it's with the trend. Now we could look for a higher risk to reward, but first we need to identify, is there an opposing zone in control? There is not. Remember, there is, but for the sake of the video, we're saying there isn't. So there's no higher time frame supply and control, so we can be less aggressive with trade management. Meaning, if we get rid of this risk to reward tool, you can see we were filled on this trade right here, it looks like we spiked above here and then we push back down again. This is a time where, let's say it was counter trend. Let's say this was a counter trend trade where we're looking to be more aggressive with trade management. This is a time where I probably would have put my stop to break even, and I might have even been stopped out there at break even, and that would have been unfortunate, but that's all part of trading. When price goes in your direction after you get stopped out, it sucks, but it's all part of trading that you guys need to learn. So this is an instance where I wouldn't really be moving my stop to break even unless we got like maybe above this high here, then you can move it to break even. And why? Well, because it's with the trend, there's no higher time frame supply above that's going to come into control and shoot price down, right? Just like we saw maybe up here, this is when the higher time frame supply came in control, and then we saw that massive drop. That's what we are trying to avoid, right? When we identify our higher time frame supply. In this instance, for this example, you didn't have to be aggressive with your trade management, right? And then you could have even been more aggressive as we broke the high. Then you could have put your stop loss from here to here, bumped it up here, you would have been saved. And then, you can just really get a lot out of the market if you continue to move your stop loss up. But this is a time where you can justify just having a trade like this and simply just looking for maybe a 5-to-1. As long as there's no opposing supply above, that's when you can really get those large risk reward trades when, again, our entry time frame zone lines up with the higher time frame trend, meaning we had a daily uptrend and there's a demand zone, not a supply zone. So for the opposite, if there was a downward trend on our higher time frame, we would want to look for entry time frame supply zones to trade with that trend. Our entry time frame zone lined up with our higher time frame upward trend, and there was no opposing supply on the higher time frames that was coming in control. That is the first example of when you can expect a higher risk reward and be less aggressive with your trade management. Okay, now we are going to talk about the second time where you could expect a higher risk reward and be less aggressive. This is when our entry time frame zone is inside of or reacting off of a higher time frame zone. So going back to this example, you guys know the last example we talked about, we deleted or ignored this supply that was actually there. So let's go ahead and draw this supply zone again. So that supply zone is there, and remember, this is a supply zone because it removed an opposing demand zone. That is why that is a supply zone, just a reminder. So in this instance, we have a daily supply zone that is in control. But just like in our last example, we are trading with the trend. So longs are in theory with the trend, guys. So what does that mean? It means we got to be cautious of this higher time frame supply. So this is when you could actually take a counter trend trade, because any short trades on your entry time frame is going to be counter trend when you are trading with a higher time frame trend. So it is a counter trend setup, which typically when you're trading counter trend, you want to be more aggressive with your trade management. But this is when trading counter trend, you can look for a higher risk reward, is when it's counter trend, but an opposing higher time frame supply or demand zone is in control. So the opposite of this for demand would be, let's say we had a higher time frame area of demand down here, right? And then price is trending down. We have a very nice looking downward trend line, and then price contacts this demand zone. This is when you could look for counter trend demand zone setups and look for a larger risk to reward. Now, let's say this took place, right? This downward trend, let's say it was something like this. This is our higher time frame demand. We have a downward trend line looking really good for shorts, and then we get a little entry time frame supply zone right here. Well, we're not at any higher time frame demand. That's when this counter trend demand zone trade is going to have to be a quick take profit. We'll discuss that in a bit, but I just wanted to kind of show you guys the opposite for demand. So in this instance, we prefer to be getting in long. Longs are higher odds for not only higher odds, but higher risk to reward and less aggressive with trade management, but the higher time frame supply came in control. So that is another instance and time when you do not need to be super aggressive with your trade management. So this is just an example for the sake of the example, but you can see price pushed up. We created a supply zone. Again, massive move down. That is why it is a supply zone. Not only that, we removed some sort of opposing demand here, which kind of confirms our supply or demand zones. That's one way to confirm a zone. So what took place up here? Well, let's say that daily supply we were just talking about, let's say it came in control up here. Let me just make this red for the sake of the video. So like I said, let's say the daily supply was up here, right? And we did not contact it yet. We're so close to it. This is where you'd want to be more aggressive with your trade management. Why? Because we are not at a higher time frame supply zone. We are just sitting right below it. However, as soon as we contact this supply, let's say it was down here, as soon as we contact that supply, then this becomes what we call a confirmation trade, which basically why we want to be less aggressive with our trade management and why we could look for a larger risk reward in this situation is because we have not only a nice entry time frame supply zone, but we have a supply zone on the higher time frame that is also in control, which is, it's kind of like, you have a team behind you, right? You have help, you have support. Let's say you are playing sports, hockey. I play hockey. I don't know what you guys play for sports, but there's people on forward. There's 3 forwards, right? And they are attacking. And like if people get around these forwards, we have the defensemen, 2 defensemen, and a goalie back here to help give you support as well. It's kind of the same thing, right? We have our good supply zone with higher time frame support coming in as well, which could really drive price down. So that's why this is an instance when trading counter trend, you can be less aggressive with trade management and try to look for a larger risk to reward. So just like we were talking about in the last example, the same kind of thing here, guys. That will be our supply zone trade, and you can really look for a pretty big move. And yes, you could easily be bumping your stop loss along with price, and then eventually you would have been stopped out, but stopped out for a nice profit. So this is the next example when you want to be less aggressive and when you can get more out of the market. And I'm sure there's many people who are trading these counter trend setups and maybe they only look for a 1-to-1, 2-to-1. That's fine. But there's, again, knowing when to be aggressive and when not to be is going to just kind of increase your edge a little bit, and you can make a little bit more money. So this is another example of when we could be looking for a bigger risk reward, just like one of the members did here on this pound trade. He had a 1 hour area of demand on the pound, as you can see, and then he got his confirmation trade on a 5-minute time frame inside of the 1 hour higher time frame zone. So it's basically the same thing as this example, right? This is the higher time frame zone, just like he had the higher time frame demand, and then we look for zones formed on our entry time frame, and we can get decent trades out of those zones. If you want to trade alongside myself and the community, join the Diamond membership for exclusive access to our daily market breakdown videos and catch trades like these. Plus, dive deep with our full-length forecast covering 26 plus markets, our interactive Sunday Zoom sessions, and personal homework to sharpen your strategy. And you'll also join our private Discord group for direct access to me and unlock a complete library of A to Z video lessons to master supply and demand trading. Don't miss out. Let's level up your trading. Links are in the description down below. So when do we want to be more aggressive with our trade management and expect a lower risk reward? One example is when we are trading counter trend to our higher time frame. So let's say we have a downward trend on our higher time frame in this situation, and we have a good area of demand to potentially get in long. This is a counter trend setup because we are buying on our entry time frame when our higher time frame is in a downtrend. So that is an example of when you want to be more aggressive with your trade management. So let's say you like to look for 5-to-1 risk rewards. That's just what you like. Maybe you expect you've accepted that you are okay with losing more, but you are looking for 5-to-1s, 4-to-1 trades. Well, in this instance, again, this is a counter trend trading setup. This long trade, we want to be looking for shorts. That's where the most money is to be made. So this is a counter trend setup. You shouldn't just place an entry, stop, and a 5-to-1 take profit. This is an instance where you want to be more aggressive. So for example, we got a demand zone here, not the best demand zone, but we got a pullback to it and price push up. This is when you want to be, as soon as we get this big candle here, obviously every time price hits a zone, it's going to look a little bit different, guys. But in this example, this would have been a great time to, at least after this explosive move, take your stop from down here, put it to break even. And then as we broke the high, that's when you want to be locking in some of these gains and just kind of trailing price. And eventually you will be stopped out. But look what happened, right? If you would have just had a take profit at 5-to-1, or if you would have just moved your stop loss to break even, you would have broke even when you could have easily, locked in profit. And that's an example of when you can trade counter trend, but don't expect to get a massive 5-to-1 move. Can it happen? Sure, right? You could have easily put your stop to break even, price could do this, created a new demand zone here, move it from here to here, and you could have gotten a 5-to-1. And it's happened to me too, where I'm only looking for like a 1-to-1. and then it ends up being a 5-to-1 because price just takes off, and then you just keep bumping your stop loss in, and you kind of get lucky on the way up. And then there's been times where maybe you turn a 1-to-1 into a 2-to-1. There's been times where it gets to break even, right? But it's all about that trade management, and you can even turn these counter trend trades where we are expecting a lower risk reward, like this situation, and turn it into a higher risk reward just with trade management alone. All right, now one of the other times when you want to be more aggressive with your trade management and expect a lower risk reward is when you are trading with the trend, but we are at a higher time frame opposing zone. So this is the exact same example, but for the last example, this was a demand zone that we were buying when the higher time frame trend was down. Now, let's say this is the same demand zone, but let's say our higher time frame is trending up. So what that means is this 1 hour demand zone lines up with our higher time frame upward trend. Typically, like let's say the higher time frame supply was up here, typically you can look for a higher risk reward in this situation. Just like we talked about earlier when we were talking about when to be less aggressive with trade management. When your entry time frame zone lines up with the higher time frame trend, but we're not at the opposing zone. When this all changes is when something like this takes place, where the demand zone was created, right? Price pushed up. We're trading with the higher time frame the higher time frame trend. However, a higher time frame opposing supply zone has come in control, right? Just like over here on this daily time frame, we have this daily supply we've been talking about a couple times now. And again, the long trades are with the trend, right? The daily trend is up. Typically, we can look for the higher risk reward. The difference is that we contacted that higher time frame opposing supply zone here. So in this instance, this is another time where this demand zone, you definitely wanted to be pretty aggressive with your trade management. It's not the highest odds thing to be trading on a lower time frame at a higher time frame supply zone. But the reason I'm saying you can still take this trade is because I've seen it 100 times where I've seen a demand zone form that's opposing the higher time frame supply zone above, and then price breaks through that supply zone, meaning you could definitely get more out of the trade. And it sucks when we get a good demand zone formed right at an opposing supply zone, and you're like, I don't want to trade it because we're at an opposing zone. You can still take that trade. It's just don't lollygag with your trade management. Don't just set and forget it. Set it, and if you get filled, right, don't just look for a 10-to-1, right? Know when to look for a 10-to-1. 10-to-1s are pretty crazy, but you got to know when to look. And that's the beautiful thing about understanding this multiple time frame or top-down analysis, whatever you want. This is an instance where we could have locked in profit here, and then price would have came down and stopped you out. Why? Well, because higher time frame supply came in control. But when this is not here, when this is up here, and it's not in control, there's still profit margin left to go up. That's when you want to be less aggressive. So this is another example of when we're at an opposing zone, right? So when our entry time frame zone is opposing our higher time frame, that's usually when we want to be way more aggressive, with our trade management, guys. And one of the last ones here, another important one. Let's say our higher time frame is sideways. So in this instance, before we broke this high here, this chart was sideways. Let's go back and I'll show you guys what I mean by sideways price action. It's a little bit difficult to find sometimes, but I'm sure we can find it. There's a lot of times we are sideways, and it's really not the best situation. So you can see here, this is an example of pretty much sideways price action right here. Let me just draw it out. Something like this. This is sideways action where there's really not a whole lot going on. You could say maybe the overall trend is up, but nobody would say that this is not sideways in this bubble right here. When we broke out of this high, that is when that trend continued. In sideways markets, it's very, very difficult to be trading, especially on a higher time frame. So I always recommend in sideways markets, when our higher time frame is sideways, be aggressive with your trade management as well. Why? Because we see prices do this so much where it's like you might have a zone here, stopped out, zone here, stopped out. I personally don't really like trading in sideways markets, and if I am, I'm treating it like I'm trading counter trend, and I'm being aggressive with my profit taking and my trade management. All right, now we are going to do a quick summary and a recap so that everybody understands what is going on. And we're also going to be talking about the time frame combinations that you guys should be using. Just a reminder, if you have any questions at all, if you were confused about anything I said in this video, please do not hesitate to leave a comment. I will respond to every single comment no matter what. So with that being said, let's talk about the time frame combinations. So if you want to be day trading, we have 3 combination possibilities. If you want to be swing trading, the same thing. We have 3 trading combinations. Now I want to tell everybody right now, price is fractal, meaning things on the 1 minute time frame can happen on the daily time frame. If I open up a blank chart, you won't really be able to tell what time frame you are looking at just based off of that. You'd have to be able to be told what time frame it is because you can't tell. I will also say that, trading a 1 minute time frame, I do not recommend that for new traders. I cannot stress that enough. I would be sticking to, if you're learning to trade, I would definitely start with swing trading and H1 entry. I think that's the best decision to be doing. But you can see these are our entry time frames followed by our higher time frame combinations. So as far as a recap, just to kind of do a quick summary, when we are trying to look for a higher risk reward and be less aggressive with our trade management is when our higher time frame is trending. So if we are buying with this higher time frame trend, that's when we can be less aggressive. If the higher time frame trend is up and we get a supply zone short, that's when we want to be more aggressive. If we are trading long with this higher time frame trend, but then all of a sudden price contacts an opposing higher time frame area of supply, then we want to be aggressive with trade management. If you are trading if you're trading counter trend against this trend, but we are coming into that supply zone, same thing, and we are looking for a short trade, then we can be less aggressive with our trade management because we are trading at a higher time frame area of supply. And if our higher time frame looks something like this here, if I just were to do something like this, continue this sideways price action, any sideways price action like that, it's typically best to be more aggressive with your trade management again. So hopefully this summary kind of helped you guys summarize it all together. I release weekly Forex forecast videos every single Saturday, guys. So if you want to follow along with my analysis for free, make sure you subscribe to my channel and watch my forecast videos every single week. I have a full course video here for supply and demand trading that's over 1.5 hours long that you guys should definitely check out as well if you want to learn more about the supply and demand trading methodology. And of course, if you want a mentorship program, I also offer that as well. You definitely do not need to sign up. It's just more for the serious traders who want that mentorship every single day and to actually really help them get to that next level of trading. It doesn't mean you can't learn stuff on YouTube, but obviously with a mentor, it's just more of a personal experience, and it's really where we really dive deep into the strategy and into the psychology as well. So with that being said, guys, I hope you guys all enjoyed this video. Any video suggestions, I will also take those in the comments as well for upcoming videos. And again, any questions, don't hesitate to leave a comment. Make sure you hit that like button and subscribe, guys, and I'll see you in the next video.